so happy to have Brandon Schuh here, who's a Senior Vice President at the Christensen Insurance Group. And this will be a very kind of technical session. He'll give us more kind of practical information about how they're helping micromobility operators and people in the industry kind of get the necessary coverage that they need in order to operate responsibly. And he's kind of, Brandon's a big fountain of knowledge about all of the liability and coverage requirements. So do please post any of your questions that you may have for Brandon. This is supposed to be more of a fluid session where we take questions from the audience. So do drop them in the chat if you have any. But I'll just turn it over to Brandon, and yeah, I'll fade into the background for now. But thanks, Brandon, for being here.
Cool. Thanks a lot. Appreciate the opportunity to talk to everybody here today. Some of you might know me from a few of the sessions in the past, or some webinars or whatnot affiliated with micromobility industries. But here today, just to give a real quick background on who I am and what we do at Christensen Group and our shared economy practice, and then open it up pretty quick to questions, just because I know that, with a lot of moving parts, a lot of new countries, new regulations, compliance issues across the United States and across the world, there's a lot of questions on, what do you need to be insured in all of these different jurisdictions? So that's what we'll go through today. But very briefly on me, my background is I've been in the risk management space my whole career. I began as a risk manager, or claims investigator for a ladder manufacturer. Ladders have one of the largest litigation tendencies in the U.S. and in the world. So managed about 50 to 70 actively litigated cases at any given time throughout the country in that job, and then transitioned to the brokerage side after about 10 years on the client side, and have focused my entire brokerage career since 2012 in difficult marketplaces, specialty marketplaces, where coverage is not easily attainable. So I started from a micromobility or personal transportation space. We started insuring some of the early hoverboards back in 2012, 2013 when they hit the street. And then from that point on, it's just kind of evolved into anything with wheels, anything that moves, ATVs, UTVs, electric bikes, electric scooters, electric skateboards, self-balancing type of equipment. And then in the early days of micromobility in 2017 and 2018, we started doing a lot of that. So it's just been kind of an evolving process where our team here has, grown. We've gained more clients in a variety of different areas, but now, have a pretty niche specialty in the micromobility space. And as a broker, especially on a per capita basis, saw some stats on our brokerage here. We're a good sized brokerage, but we're privately owned. We're an ESOP. But per capita, we insure more micromobility clients than anybody in the world, as far as I know. So we're definitely very knowledgeable in the space, and want to be here to answer any questions. There's a variety of different areas that I've kind of outlined today that we can talk about. What's the appetite for different models, dockless, public, private fleets, subscription models. There's all sorts of different iterations of this marketplace throughout the United States and throughout the world. What does that look like from a carrier standpoint? What does the liability marketplace look like from a general liability standpoint, from a rider liability standpoint? What are these other lines of coverage that you might kind of ancillarily have heard of or need? Cyber liability is a big one. Directors and officers insurance, if you're fundraising, that sort of thing. And then covering the assets themselves, whether that's on the ocean or on the ground, how do we protect them? And then finally, kind of the auto marketplace, what does that look like for rebalancing your units or driving around to clients or anything in that kind of realm? And I can go through these if there's not questions, but otherwise we can just kind of go through the questions that you have out there and talk about it. From Bob, Bob McGrath, have you encountered an emphasis on excess coverage requirements by municipalities? Yeah, Bob, I'd say that's kind of generally an area that's getting a lot more attention lately on excess liability, especially as especially as municipalities grow and become more sophisticated in the micromobility space. I think they, either by anecdotal evidence, newspaper evidence, whatever it might be, there are a lot more cities that are tending to require more liability insurance as of late. I'd say and I can speak just anecdotally to this, I'd say that the average requirement that we see for a dockless model is probably 5 million. From a private model, meaning if you're running private fleets out of hotels, if you're running a subscription style business, you might not have as many of those requirements. But from a municipality standpoint, we're seeing 5 million as probably the base or minimum these days. From David, question, are there features that lower insurance costs? Yes and no. Certainly as you scale and as you grow, insurance becomes more tolerable, but there is a big barrier to entry in the micromobility space. So a lot of carriers have minimum premiums that we're seeing, particularly on the dockless side. So when I have this slide deck up, that's up right now, talking about the different models that's up there. Public dockless models are by far the most expensive and burdensome models, and that's because it's you don't have the, from a carrier standpoint or an employer standpoint, an operator standpoint, you don't have the autonomy that you would have in a private model. So you can't control the ride as much. So there's just more risk affiliated with that sort of model where you have less control, less autonomy over the rider, what they do, where they dock, where they park. There's just less there. So it's harder to obtain coverage. There's less appetite for it, and there's less capacity, meaning carriers are not as psyched about offering as big of limits that they might if it was a private model. What else do we got here? Let's see. I see something regarding helmets here. I'm sorry, I don't. Helmet, so to elaborate on that, I'll use helmets as an exemplar to get better insurance rates as you scale. You can do things like risk management activities that can improve your rates. So, if you mandate helmets, it's going to help you for sure, because as we know, head injuries are one of the primary large exposure, nuclear verdict type of situations that we would see in this space. So having that sort of mandatory requirement, although in a dockless model, again, it becomes really difficult because you can't mandate that, because you don't have that control over that process. But the more you do in terms of the flow of data, if you're scoring riders, if you're making sure using AI technology that they're not driving on sidewalks, if they're slowing down during intersections, if you have a kind of a beginner speed and a more experienced speed on your product, those are all things that you can do to kind of mitigate some of the cost or scale some of the costs from that perspective. And I'd be happy to talk about that in more detail. If you have questions, here is my email's at the end of the slide deck here, but you can certainly reach out to me for that. What is the trend regarding third-party coverage for customers? Is it being driven by the industry or regulators? I assume that means third-party liability coverage. Yes, I'd say it's mostly being driven by either contracts that you have with clients, whether that's private or public, or just in an RFP situation in a dockless model. There's, as you've probably seen, just certain minimum requirements for insurance that they have. And that's where I was noting that $5 million is probably the average that we see across the United States today. Let's see here, from Keita Hill. Hi, Brandon. Any innovation you are seeing around simplifying waivers? Specifically, are you seeing appetite for insuring micromobility rentals without signed waivers, e.g. ski lifts, public trails, that sort of thing. I'm not seeing many insurance companies that are going to accept something without a waiver. My good friend, who's often accompanies me on things like this, John Wackman, who works for Nyland Johnson and does a lot of work in the contract and defense litigation space on the attorney side, would tell you that waivers are a very crucial part of this business or any business. They're not always a full bore protection against claims that come up, but they are certainly a mitigating source to depress verdicts or depress the amount of settlement that there might be at the end of the day. So in terms of innovation, there are certainly a lot of check the box if you agree to that sort of thing based on platforms and apps that are out there. I don't think they have to be too difficult as long as you're making sure that the customer is reading it. But no, I'm not seeing a lot of innovation there beyond that point. From Philip, so a private fleet carrier is recommended to have how much coverage for an electric assist bike? On the private side, it's just going to depend on, number one, what you feel comfortable with. And we can talk about that just from a, what is out there perspective. What are the benchmarks? What is the verdict potential if you're running your own fleet? And that's usually based on revenue or how many bikes, that you might have in your fleet just from an exposure standpoint. I'd probably say 5 million would probably be the mean number or the average number. But if you have a fleet of 50 bikes, you're probably not going to buy $5 million in coverage. You might buy $1 million or 2 million. So it's really just based on kind of that bell curve or that scale as you grow. Our three-wheel, from Ken, our three-wheel electric scooters that deliver novice rider stability less expensive to insure. It kind of goes back to my previous commentary on this topic. It's in a very small scooter operation, it's not going to matter that much because there's minimum premiums that you're just going to have to deal with wherever you go. From a larger fleet perspective, the more risk management services, the more risk management that you have within your organization, within your operation, the better it's going to be for rates. We'll have this. The insurance space is still a very belly-to-belly business. It's still very much, I'm going to get in front of the underwriter and pitch your story to them. So that story is all about a narrative. And it's all about how well I can communicate that to the underwriter, how well you can communicate that to the underwriter, and whether or not they buy into the data and the fact set. So, but by and large, on average, over time, the more risk management features that you have within your operation, the better your insurance rates are going to be. From Ralph, for a shared mobility program, are there insurance considerations that make it difficult to allow minors under the 18 to rent devices? Yeah, I'd say most of these. Well, number one, from a municipality standpoint, most municipalities don't want anybody under the age of 18 riding. Just from a legal perspective, having minors on anything complicates things because it extends the statute of limitations in most states, and carriers don't like that kind of unknown that presents. So if a 10-year-old is riding a scooter, he could have an accident today, and your statute of limitation wouldn't start running until he's 18 years old. So that presents a little bit of a difficulty there. So by and large, 18 is usually the bottom of that, just from a municipality contract perspective, and then from an insurance perspective too. Definitely interested in the DTC e-bike requirements for liability. Direct-to-consumer products, if that's what you're referring to. So if you're just selling a product to the customer, those requirements are going to be a lot more fluid, and they're going to depend on the distributor or the mechanism by which you're distributing your bikes through. So if you're selling through Walmart, they're going to have requirements that are not on Amazon. Or if you're selling directly from your website, obviously there's no requirements. So then it again becomes, what's your risk what's your risk tolerance? What's the calculus that you're using to determine what we should or should not carry? And that's going to be a conversation with me probably in terms of benchmarking data and anything that we could provide from that perspective. Okay, I see. Anne was referring to the coverage for the actions of customers, not the operators. So there's kind of two slices to that. At the end of the day, as an operator, they're going to take on the liability of the negligence of the rider, regardless of if the rider has insurance or not. But we are starting to see more and more rider liability coverages that are being offered. You know, we do a fair amount of them overseas. There's not a lot of that going on in the US right now, but we do have an option for it if you want to talk about it. But it's one of those evolving areas where this could end up like car insurance, where if you have an electric scooter, you're going to be required to buy insurance of some kind, rider liability, personal accident, that sort of thing. But until that time, in the US, it's one of those nice to haves instead of need to haves. Do you see there being a potential for group policies which multiple operators can buy into? There's attempts out there to do that. In the public dockless model, it's going to be really hard to do a shared insurance policy, just because each municipality, each jurisdiction wants their own limit of liability. So as soon as you start sharing limits, that's going to defy or go against the, what's possible, or from an RFP perspective, you go apply for an RFP and you say you're sharing insurance with 20 other operators. Well, that city might become a little wary of the fact that you don't have your own dedicated limit. So there aren't at this point any group captives or anything like that, mostly because it's too dynamic and unknown and too young of a space to do something like that. We could look at risk retention groups, but again, now you're talking about sharing limit. So, if you're in a private model, we have some pretty affordable options for you. Dockless, it's going to be a tough sledding there, I think. From Kevin, what paper do you write this business on? It's very Lloyd's focused. A lot of Lloyd's is very innovative in the micromobility space. We have two Lloyd's markets, one more for dockless and one more for private models. And that private model Lloyd's syndicate is specific to us. We've created it. We've done a lot with that. So, and then there's some others, some US carriers that will do it as well. Hartford has a unit called Y-Risk that does this. Prime can do this. There's some other carriers as well, but it's very, very niche, and there's not a lot of appetite out there for it. So we've tried to carve out some really, really good relationships with the underwriters in the space that do this. And by, it's kind of that old adage, this is all we do and we do it well. So we do so much of this that we have good relationships with everybody in the space, but there's no silver bullet here. There's no, I'm going to get this for some wild deal that somebody else isn't going to get it for, just because it's a really challenging space with unknown verdicts, but with expensive defenses so far in the industry. What about individualizing risk, personal insurance for rider? I think I covered that, but yeah, we do have it. Can you talk about liability for municipality in case of a rider injury using shared micromobility? Libby, I'm not quite sure of what you're getting at with that question, but from a municipality standpoint, they're usually going to push all the risk onto the operator. So the municipality will have little or no, risk involved from that perspective, unless there's a, massive, pothole in the road or something like that, and it couldn't have been contemplated beforehand. But I mean, if it's within the realms of operations, it's usually going to be the operator that's ends up holding the bag at the end of the day, or the one in front of the jury. So here's my contact information, just so you have it. Massachusetts requires cars to have insurance. Micromobility devices have no such responsibility. True. So we talked about that. I think over time, that's going to change. We're seeing it already in some electric bikes, especially those that are on the verge of, mopeds and that sort of thing. Mopeds have obviously become regulated over the years, and different cities have different requirements for what a moped driver has to have. I'm assuming that we're going to have something similar to that with electric bikes and electric scooters. John Johnson, what is your definition of risk? In this risk as it relates to the insurance industry, when we say you're on risk, or what is the risk? It's usually just the exposure kind of integrated into the insured, the insured company. So if you work for Lime and we're underwriting the policy, we'd say that Lime is the risk. The exposure, the on risk would mean who's ever providing the paper, who's ever supplying coverage for the risk that Lime presents. So that's what we normally mean. Let's see, any other questions here? Yeah, I'll go through a couple of these other slides. So just from a management, so there's some other markets here that we're seeing obviously come up here. I don't know if anybody's been paying attention to the cyber market, but it's much more expensive in the last 3 months, 3 weeks than it ever has been. So keep your eyes on the cyber market. I know there's a lot of people raising money right now. A lot of people that have investors, are going to private equity, going to venture capital. Keep an eye on directors and officers insurance here, because that's going to become a bigger deal as you have more individual equity holders within your organization. As that becomes more complicated, the directors and officers exposure goes up. Crime coverage, everybody sees the stats on crime. Crime kind of integrates with property coverage, but there are ways to protect your assets from the factory all the way, to the shores, and then subsequently, there are ways to insure the assets out in the world. If people are using them, it can become very expensive, but there are ways to do it. That's kind of indicated here. And then finally, from an auto insurance perspective, auto is becoming just as problematic for some operators as the general liability policies themselves, just because it is kind of cumbersome and difficult to transport rebound scooters throughout the United States, particularly in denser areas. That's obviously the reason why we have scooters, is because we're trying to eliminate cars from the roads. But in this kind of interim space where we still need the van to move the scooters back and forth, the auto insurance can be difficult and can be cumbersome, but we have programs for that. A couple more questions here. Closed loop systems, i.e. warehouses, are they self-insuring like workers' comp? You can't really self-insure work comp very, very effectively, but from a property standpoint, no, most people are covering property, whether that's through a stock throughput policy or just a warehouse policy that covers the inventory. Out in the world, most people are not covering the assets. So if your scooters are out being used by your clients, it's very, very difficult to cover that product on an individualized basis. But we can cover them while they're in the warehouse or while they're in the facility to protect against fire or theft or whatever it might be. So again, the micromobility space remains very, very competitive. GL and excess is by far the most burdensome policies we have right now. Foreign markets, Europe, Canada, South America, they're less difficult, but they're still challenging for sure. I just wrote a policy in Kenya, so I mean these policies are getting up and out everywhere. Rider liability coverage, again, still very European by nature, but we're expanding that now to a variety of different municipalities. That's that was pretty much it. Again, I want to thank everybody for joining today. Again, here's christensengroup.com, our website. And then if you go in there, you can click on the specialty tab and highlight our sharing economy webpage, and you can apply directly there. Actually, why don't I just, here is our sharing economy page, and there is an app built into that directly, which pings me as soon as you fill it out. Go to relate to my London, UK market operations. Oh, thanks, Ferlin. Appreciate it. Appreciate everybody else joining. Please reach out to me, email me with any questions. My email's in the chat here, and it's also on this page. I can email anyone the document from today as well. I can make that available to the folks here at Micromobility Industry. So let me know if you have any questions, but thanks again for joining.